I'm Corbett Wall with DV Auction, here with a cattle market summary for the week ending December the 22nd and a year in rear view of 2017, brought to you in part by the International Brangus Breeders Association. Do you like early maturing and long-lasting females? Brangus cattle are known for the maternal qualities and a quick breed back. International Brangus Breeders Association encourages you to go Brangus this sale season. For more information or to find a breeder near you, visit gobrangus.com. We're going to look at 2017 in review, and at the end of this we'll look at 2018 and a global market within a 150-mile radius, that is, if you're looking at this ELD mandate, which is really going to turn the industry on its ear. But let's look at the markets for last week before Christmas. Look at the board. February live cattle ended the week at 118.57, down 245. December ended at 119.82, actually up 92 cents, trying to keep up with the cash market, which was higher last week, if you remember. March feeder cattle was down quite a bit through the week, but really down hard again on Friday after the cattle and feed report come out, so bearish there, which it come out at noon. Normally it doesn't come out until after the board's closed, but it did come out earlier in the day because the holiday was coming up, and that just gave the board a chance to tank there at the end of the trading session. But March feeder cattle ended at 138.55, down 6.95 for the week. January feeder cattle 141.55, down 6.20. Your fat trade last week through Thursday, they had 86,100 head in the 5-area feeding region. Most of your sales, live sales, were at $1.20. We had light dress trade, even up in the northern plains. Most of your trades were on a live basis, but we did have some higher, quite a bit higher dress trade from 190, 191, which ended up with a weighted average quite a bit higher than a week ago or the same time the previous week. But look at your live steer weighted average through Thursday was 119.94, up 23 cents from the weighted average at the end of the previous week. And like I said, your dressed weighted average at 190.32, $1.40 higher than the weighted average at the end of the previous week. Box beef cutout values ended the week before Christmas with the average of the week's trade at $200.14. That was down $2.86. Your select was actually higher at $185.91, up $1.20, with a choice select spread there of $14.23. Look at your slaughter for the last week there before Christmas, 612,000. That was 18,000 less than the previous week and 43,000 more than the same week a year ago. You look at 2017 altogether, up through the week there, the week that finished right before Christmas, 31,205,000 head slaughtered in 2017 compared to 29,594,000 that were slaughtered or harvested there in 2016, with your slaughter up almost 5.5% year to date. And that's really what's been keeping our cattle markets going with these heavier numbers. The slaughter's just been real aggressive, and we've been selling meat right along, which has really helped stay ahead of things. But we did see some moisture come across the northern plains and into the Midwest with some snow. I know it slowed down some of the holiday travel, but even that little bit of moisture there is really going to help. And but it's still very, very, very dry in the southern plains. But look at your markets and at the end of the year in review, because we're not going to have any sales at all of feeder cattle here the week between Christmas and New Year's. We're not going to have any feeder flashes, so this is going to wrap it up for the year. I wanted to look and give you some comparisons here at the end of the year compared to the end of last year. But down in the southeastern livestock markets, 400 to 500 pound steer calves at the end of the year here in 2017, 160.69 on the average of your 4-weight steer calves. Compare that to 2016 at the end of the year, it was 134.12. So that's over $26.50 higher on a 4-weight steer in the southeast. Down in the south central states in the auctions, 6-weight steer there averaged $153.58 at the end of this year, compared to the end of 2016, $134.56, up just over $19. So not much to complain about there. And in your north central states, an 8-weight steer averaged $154.08 at the end of this past year, compared to $134.14 at the end of 2016. That's up just almost $20 on an 8-weight steer. So that bodes pretty well for the way the market is. Everybody may be kind of down in the doldrums, and we may be looking at a lower market to start 2018 with this cattle on feed report, but still, we're not in too bad a shape if you look at the whole thing. Your year-to-date auction receipts are up nearly 10% in 2017 compared to what they were in 2016, and that just goes to show you how much bigger our calf crop was. But your analysts just continue to not be able to fathom that there's more cattle in the world than there was the same time a year ago. Cattle on feed report that come out on Friday, they're right before Christmas and before Christmas weekend, showed your December 1st inventories on feed at 108.1 compared to the average of the analyst guess at 106.7. Your placements through November, 113.9 they come out to be, compared to the average of the analyst guess, which is 105.8. And once again, I've just had it with this, and I don't understand why more people are not enraged by these advertised and published average of an analyst guess, which are completely blowing the placement figure, and it just sets the whole industry up for a big bearish down market, especially on the futures, which blends over into the cash market. And I don't understand why we continue every month in the cattle industry to have a big drum roll and a big unveiling of the cattle on feed information, which has been being compiled and should be open to the public as it's being compiled, and we shouldn't have to wait for a big drum roll or an expectation and estimates that are so far off the mark that we cannot count on them anymore. And it just it works right into your futures traders' hands, because it brings about a lot of volatility. It's hard on your producers, people that are out there hedging, and guys that are in the market all the time. And I'm not sure why we continue to do it, but we're just playing right into their hands and just look like a bunch of dumb sheep out here. But marketings, of course, they finally figured out if you just total up the total amount of marketings that USDA tells you that they harvested every month, you'll get pretty close, and they did again, 103.2, which is exactly what they guessed. But not sure why they can't set some models up, look at our auction receipts, look at the total numbers of the calf crop, the disappearance, go in there and figure all that up and come out with a number that's somewhere close with what USDA is going to come out with on that placement number on the on-feed report. But it just really has gotten disgusting. But look at some other information at the end of the year. Your choice box beef cutout value ended very close to the same as it did at the end of 2016. It did go higher through the year and was higher a lot of the year than it was last year or in 2016, but it did peak well above what 2016 was, with mid to late June there hitting over $250 a hundred, which was an all-time record high, led by your rib primal cut there, which really saw some increased buying this past year. But your fat cattle ended up, like we said, here at $1.20. They may do a little bit of trade here between the week ending for the end of the year, between Christmas and New Year's. But as of this report, the last established market we have is 120. At the end of 2016, it was 118. So very close to that. But we did peak higher and were higher in 2017 than we were most of 2016, with an early May peak of 147. If you remember that, that was a pretty good market. But you look at the big stories that happened through 2017 down in the Southern Plains. Your early spring fires that were very devastating, loss of life, loss of livestock, loss of fences, loss of feed. The stories of the auction markets coming in and donating a lot of money and putting together sales where people could really help out those that were in need, and that was it was a devastating blow, but it ended up being a really big feel-good story for the industry and the way of life that cattle people live and the way they take care of their own. You look, we had a big fine that come out with McVane Trading and Associates being fined $5 million for really just providing overconfidence to the market a few years before, and may have been partly responsible for the all-time record high prices that we saw on cash fat cattle and cash feeders by pushing the market, the futures market, higher and making it look like there was a little more confidence in the market than there really was by overstepping their holdings there. But it's basically what managed money and the funds do to the market every day, every year. And it really frustrated a lot of people that the one outfit, the one cattle futures trading outfit that was on the cowboy side, on the cattleman side, the producer side, and the long side, and has been for decades, McVane Trading out of Memphis and Memphis Charlie, being fined $5 million by CFTC. That was frustrating. Another big story we had through the year was the outstanding meat demand that we had domestically and for export. We did open up to a lot of new markets through the year there. I think everything with Trump getting in there and a lot of confidence and a lot of different factors helped that, but basically people have come back to beef and are really liking it. A lot of these other countries that aren't used to eating that good have found that this grain-fed sweet meat that we make here in the United States is really something special, and they want to get their hands on it too. Another big story was the JBS scandal, all in Brazil. We didn't have the scandal here in the United States, but over in Brazil, the payoffs and the different things that went on over there, it was a lot of bad publicity for JBS, but the company seems to still be healthy here in the United States, but it has been rumored that they have sold Five Rivers Feeding, which is the largest cattle feeding enterprise in the world, and nobody knows who that sale has been to, but pretty much everybody in the industry figures that that sale has gone through and JBS has sold Five Rivers to somebody. But another big story is what I harped on earlier, and I've been harping on pretty much the whole last half of this year, is how your Urner Barry industry analysts that publish the estimates for the Cattle on Feed report bomb the placements every month. And the cattle industry just stands there and waits to see how bad the blow is going to be. And it creates a lot of volatility. It's unhealthy for the market. I'm not sure why everybody still falls into it and supports the way we're doing that thing. There's no need for it, the way they can put out information anymore. I don't understand why USDA has to hold that information until that third week on a Friday at 2 o'clock Central to put that information out, and why we all have to be nervous about it and have expectations and sick in the pit of our stomach to see what's going to happen and how bad it's going to hurt the industry. Why not just release the information as they put it together? And now I'm going to go on and talk about this ELD mandate with these electronic logging devices that has now come into effect December 18th. It went into effect. Your ag haulers have gotten some reprieve. They've got a 90-day reprieve there, but you've still got to have the right paperwork in your truck. And as of right now, it's not going to go away. your ag haulers, your livestock haulers specifically, are still going to have to fall under this ELD mandate. And it doesn't look like we can make enough squeaks to get any grease by the government. Pretty much every outfit that's involved in supporting producers has fought this on Capitol Hill. It doesn't look like they're going to be able to get it pushed away because it has to do with safety. And now it looks like Canada's following suit. And ignorance is not going to be an excuse when this comes about. So you got 90 days from December 18th, and you've got to have all your T's crossed and your I's dotted. And you know, in my younger days, I remember when we used to order a lot of cattle out of Florida, Lakeland, Florida. One guy truck would come in with one driver, and he'd tell us there was one stop sign between the shipping pens and our pens in eastern New Mexico. And unless nature called, he'd never even shut it down. Those cattle would be unloaded. They'd be unloaded fresh. They'd go right to the hay bunk and go to eating. And it's really, that's not that much stress. Hauling the cattle is not nearly as bad as unloading cattle in strange pens and standing around a petri dish full of sickness at some of these feed, water, and rests or livestock auctions, things like that. Fresh cattle that move through the system really fast, you don't have that much trouble. When you start having a lot of trouble is when you get stale cattle that are sitting around pens and facilities where there's been a lot of other cattle that's been exposed to a lot of other diseases, airborne illnesses, and different things like that. But basically the only thing that's going to work for your livestock haulers when you're trucking cattle a long way is to run two drivers. And we've already got a paper thin margin that most of these commercial cattle guys, your backgrounders, a lot of your feeders are working with, and it's just going to be another added expense onto your freight expense to have two drivers in these trucks to go these long distances, because they can't work more than 10 hours. That includes loading, fueling up, unloading, things like that. There's no way that you can travel hardly any distances like what we need to do these days to do this interstate commerce that this cattle business has really grown to be. And it's hard to believe that we're in a global economy now, and we're having to try to do business, especially in these ag. It hits these agriculture haulers a lot worse to do it within a 150-mile radius. You know, we can't be that small-minded whenever we're working with such a big trade area. And it's one thing to haul freight, but I tell you what, trucking freight and trucking livestock is different as night and day. When you're dealing with living things, these guys that haul cattle, they got special gifts and they've got special skills to be able to handle those cattle, get them loaded without a lot of stress. The way the load shifts is different. Everything is different. You know, you get out to fuel your truck and you're loaded with freight, you don't have to worry about them blowing shit out the side and covering you up. That's just one of the things you don't have to worry about. It's just everything. Those guys have to crawl around on the sides of them trucks and get those cattle up. It just does not work to fall under those same rules and guidelines as the freight haulers, but it's going to happen, and we might as well get used to it and figure out how we're going to do it. I don't think we can set up enough places to feed, water, and rest, and they're not going to land in the right spots for everybody. So it's basically going to have to be run two drivers in those trucks. But that's really a look at 2017 in your rear view. I appreciate everybody that watches this report from time to time, whether it's on the Feeder Flash or on these cattle market summaries from DV Auction. I hope that everybody had a very Merry Christmas, and we hope that everybody has a great and happy and profitable new year for 2018. And from home office here, DV Auction office in Canyon, Texas, we'll talk to you next week.